Hello, traders. Let's take a look at the featured stock from yesterday and then let's find a new one. My goal is to set you up with some great trades, and I hope that you'll return the favor by subscribing to my channel and by posting your comments. You don't want to miss these trades, so make sure to turn on your notifications. Let's get started. We are 2.5 hours into trading. It is Friday, March 26th. Hello, traders. Let's take a look at yesterday's pick. You can see NUE was the stock that I highlighted. I did not officially tell you to buy NUE yesterday. Why not? Because the market still was testing the major moving average, the 50-day for the SPY, the 100-day for the QQQ. We didn't know what was going to happen throughout the course of the day. Things were looking pretty good yesterday morning, and that's why I didn't say go out and buy NUE, but it was the highlighted stock that I showed you. And specifically, we were talking about how we use the 1OP indicator to monitor market conditions and to tell us when we should be long, and how we monitor relative strength. You can see NUE, this long green bar here yesterday, this breakout to a new high, put up the 5-minute chart. We can also put up the 10SI indicator that shows us relative strength for the stock. And you can see how almost the entire day this stock maintained its relative strength to the market. So every time that the S&P 500 pulled back, that was an opportunity, like right in there, to take a long position in NUE. And you can see how it moved higher as soon as the market recovered. You had even more dramatic examples here earlier in the day that I showed you, where the market sold off hard and this stock basically compressed. As soon as the market found a bid, the stock was off to the races. Lots of follow through buying today. I can show you a bunch of stocks in today's video, but I think I'm going to take a little bit of a different approach, and I'm going to focus on one particular stock, very, very actively traded by most of you. First, let's take a look at the market. What do I think the market is going to do? We go into the daily chart. You can see on the SPY that we have major moving averages coming into play. I've highlighted these. There's the 50-day moving average. We tested that 50-day moving average yesterday. We bounced off of it and we closed near the high of the day. That led us to a really nice opening gap this morning. And that bid was going to be tested because we've seen heavy selling pressure the last few weeks. Look at that drop right there. That was the test, but it held. All we did was we filled in the gap. We didn't come down, down, down. That would have been very bearish because it would have shown that buyers really didn't have that high a level of conviction through this rally here. But the fact that most of that gap was able to hold for so long told me that the bid is pretty dang strong. So as soon as we fill in the gap, you get this bullish engulfing candle, almost engulfing, followed by two long green candles. I believe that we may not be off to the races today, but we're going to spend some time in this tight trading range, and I would not be surprised. In fact, I'm kind of expecting that we're going to be able to break out through the high of the day going into the close. That will set a positive tone for Monday morning. And next week, we do have a holiday shortened week. We've got a lot of economic releases coming up. We've got ISM manufacturing, ISM services, ADP, the unemployment report. I believe that those economic numbers are going to be decent. And right now, that's what the market needs. It needs a catalyst, and we can see good economic releases coming out without the fear of a Fed rate hike. They've been pounding their fist on the table saying we are not raising rates. One of the Fed officials, Evans, just today said, we're not raising rates until 2024. That's a long time from now. So we're in a sweet spot. We can get good economic numbers and we don't have to worry about Fed tightening. They're not worried about inflation. So if we see CPI and PPI tick up, we don't have to worry about that much either. I'm going to go into the H1 chart to take a little bit longer term perspective on what's going on today. Downward sloping trend line. You can see it right here. Let me draw it for you. That has been breached to the upside. There's your downward sloping trend line. Connect quite a few points. 1, 2, 3. Excellent. That's a good sign. We're able to start grinding higher. So that looks very positive right now as well. Let's go into QQQ. Let's see what tech stocks are doing. Now, this is very important that you understand what I'm saying here because this is actually going to come into play when I highlight a stock. So you can see here how the D1 downtrend line has been drawn. Until QQQ can get above that downtrend line, you really can't touch tech stocks. You could try and buy a little bit of a bounce in here, but that's dangerous because what if the bottom falls back out? I don't think that it will, but you really need to be patient. You need to make sure that those technical resistance levels are breached. Once we're above it, it's clear sailing. We're off to the races, but you really need to wait for that to happen. We are just above the 100-day moving average. That is fantastic, but you would be a little bit early getting into those trades here. Now, we do have TLT today selling off, but it rebounded, and you can see how it sold off, and now that green bar is back to the opening price. Let's go into the 5-minute chart, and there you can see that big gap down, but we've crawled all the way back. This is good for tech stocks. This should be excellent for tech stocks because interest rates were starting to move higher this morning, but that's been erased now that bonds have rallied. We had a poor 7-year auction yesterday. That's why we got that dip. But you can see that buyers came right back in and supported it. Higher interest rates, bad for tech. Lower interest rates, better for tech. So this rally, lower interest rates, tech should get going. So we need to keep an eye on QQQ. We need to get above that 100-day moving average, which we are. We need to get above this downward sloping trend line. As soon as we can do that, that's when you can start selling out of the money bullish put spreads in tech stocks. And in some instances, for the really strong tech stocks like AMAT, you might even consider buying some deep calls that have a delta of 0.7 or higher so that they move with the underlying stock. I'm going to highlight a stock that's heavily followed, and this is mainly for swing traders. How would you approach Tesla? And I'm always trying to figure out what is the magic ingredient that you would like to watch as viewers. So please comment on what I'm about to show you. So I'm not going to show you a stock that's good right here, right now, today. I'm going to show you when it's time to buy Tesla. And we went through this conversation in the chat room a couple of days ago, and we had a member who was buying Tesla. And I analyzed the trade, and here's what's wrong with Tesla. First of all, if you're day trading Tesla, you see this drop in Tesla right here. And if you were short, you probably got squeezed out of the trade on this little rally. I like to wait if I'm day trading for the dust to settle the first half an hour, 45 minutes or so, get a feel for what the market's doing. In this case, you can see that we've got a nice upward sloping trend line here, and Tesla breached that to the downside. That would be your opportunity to get in, but you have to wait for that relative weakness to set in, which happens right about in here. And that is where you're making a new low of the day. That's an excellent entry point. But the problem was that one of our members was buying Tesla. So I said, well, wait a minute. We're on the wrong side of this trade. We need to take a look at that D1 chart. This is Tesla's longer term chart. So for day trading or for swing trading, I want to make sure that I like the stock on a daily basis. That gives me additional staying power when I'm day trading because I know that I'm on the right side of a longer term move. So I would not be buying Tesla at all, not even for day trading, not even playing a bounce because my bias on this stock is negative. You can see how I drew the downward sloping trend line here, and we have a horizontal line right here because it coincides with the 100-day moving average. Until Tesla gets above that 100-day moving average, I would not buy Tesla for a swing trade, and I would not trade it as a bullish put spread either. Because yes, it has a higher low, but we want to make sure this is still forming. This is still a downtrend here. It could come all the way down and breach that support level. So we can't really say that this is support that we can hang our hat on yet, because you can see this bearish engulfing candle today. So until Tesla breaks this downward sloping trend line and the 100-day moving average, there is no buying Tesla. There's one other thing that we need to keep an eye on, and I had mentioned it earlier. This is QQQ. Until that downward sloping trend line in QQQ is breached to the upside, there is no buying Tesla. You need to have both pieces of the puzzle. So number one, you've got the sector that it belongs to breaking technical resistance. That's bullish. Number two, you have the stock breaking above technical resistance, that being the 100-day moving average and the downward sloping trend line. Then you can trade Tesla. Now you should also be watching for relative strength, meaning that this orange line has to go above zero, and you would like to see that accompanied by heavy buying. Then you've got a nice trade setting up for Tesla. But right now, as it sits, you've got to be short Tesla if you're trading it at all. And if you like Tesla, don't short it. You're not going to have staying power, because every time it bounces, you're going to go, oh, see there? I was wrong again. You're going to be shaken out of the position. You've got to be able to come in and technically say, yes, I think Tesla is an excellent short here. Now, FXI is something that we've been watching, and I had mentioned that to you yesterday. And specifically, I had shown you that daily chart and how the FXI was below the 200-day moving average. So let's put that up. So FXI, super weak, stocks below that 200-day moving average. And in yesterday's video, I showed you how the broader index was also supporting our short in a trade Baidu that was coming up on our relative week 30 search. And if you recall yesterday, I showed you using the 1OP indicator how we trade that intraday, but we had a market that was gradually starting to move higher throughout the course of the day, but we had this run up here, and I had mentioned if the 1OP indicator had a bearish cross, then we would be looking for relative weakness. And I brought up the relative week 30 chart. Baidu was on it, and I had mentioned, okay, now this is a stock that we would want to short when that 1OP indicator rolls over. And you can see that was right about, I believe in here, we were getting this little bounce, and I said, okay, now this is starting to show us relative weakness. You can see how the orange line is below zero. That was an excellent short. I think TDOC was the other one yesterday, and that ended up being a good short as well. But this short in Baidu was supported, number one, by the stock. And let's, before we take a look at TDOC, let's go back into that chart. You can see the stock was above the 100-day moving average yesterday when I mentioned it. And please verify everything that I'm saying. Go back, watch the video. Excellent tutorial yesterday. So please go back and watch it, especially if you're day trading. If you're a swing trader, all of these principles still apply. It's just that you're using a longer term perspective. So instead of using 5-minute charts, you're using daily charts to do your analysis. But my point yesterday was that the stock still had 9 points, $9 that it could fall before it got to that 100-day moving average. Well, once it got to the 100-day moving average, the bottom absolutely fell out. So make sure that you're watching what's happening with the overall index. A lot of times traders get tunnel vision. All they focus on is the stock, the stock, the stock. The stock looks great, and they're oblivious to the market, or they're oblivious to the sector that the stock belongs to. That's where your analysis really needs to start. 75% of all stocks follow the market. So if you get the market wrong, there's a 75% chance that no matter how good you are at picking stocks, you're going to lose money. So always start your analysis with the market. In the case of Baidu, really important to know what FXI is doing. And you can see that the stock did try and bounce earlier today, but there we have an inverted hammer, and you can see that the stock is still weak relative to the market. So now we have market up, up on a 5-minute basis. This is the S&P 500. What's the stock doing? It's down on its lows. It is weak relative to the market. So if the market did happen to roll over, you can bet that Baidu is going to see some selling pressure. You can bet that Tesla is going to see some selling pressure as well because it's weak relative to the market. Sellers are putting pressure on the stock. So even though the market's going higher, that would be a time for most stocks to really rally nicely. Nope, there's so many sellers that they're keeping a lid on it and they're hitting every bid that pops up. So today, watch for the market to stay in this tight trading range, that high, that low going to be preserved. I believe that because we've been able to hold the bid so far today, we have not seen any heavy selling pressure. The heavy selling pressure that we've seen over the last few days, you can see on that H1 chart, we've broken through that downward sloping trend line to the upside. That's an excellent, excellent sign. And I believe that the market has tested the 50-day moving average, QQQ, the 100-day moving average. We're going to see a nice gradual grind higher. That also sets us up for a really nice potential move over the weekend, Sunday night. So if the market is able to close on its high heading into the weekend today, and it's able to take out the high of the day, which I believe it will be able to do, I think the tone is going to be set for a nice bounce. We also have the daily chart on the SPY. You can see that downward sloping trend line. Let me draw it in for you. It goes right about like that, crossing 4 points. 1, 2, 3, 4. We have broken that to the upside. There's your bounce off the 50-day moving average. I believe that the market finishes on its high of the day or close to it, above the current high of the day, and I believe that that sets the table for us to have a nice rally Monday. We have a shortened week next week with some very important economic numbers. Once we get through Easter, we are ready for earnings season. We've got another quarter of profits under our belt. Valuations will start to normalize. And I think that the waiting period for the market to move higher will not completely be behind us, but I think that we'll see more steady upward price action in the market and not so much of this herky-jerky 3 steps forward, 2 steps backwards process. I think that as the economy starts to gain traction, it's really going to help the market. Thanks for watching. Don't buy Tesla until you see those conditions that I've outlined. Got to get above the 100-day moving average in QQQ. Got to get above that 100-day moving average in Tesla. Got to get above that downward sloping trend line. Don't try to pick the bottom in it. You've got to wait for those technicals to confirm that it's time to get into Tesla. Please give this a thumbs up if this technical analysis helps you with your research. Thank you. Have a great weekend. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.